Welcome back to ICT Trading Concept. After a big FOMC day, I hope everyone is good. I'm fine. Today's video, I'm gonna talk about how to avoid low probability trade and take the high probability one. At the beginning of this video, you have seen a recording I have played. I took that trade to my funded account as well as mm, over here to the paper account so that I can show you to find out the high probability trade instead of the low probability trade. At the first part, I will talk about today's morning session, and at the second part, that means the last part, you will see the FOMC. Everyone was waiting for the FOMC. So I promise, guys, if you watch until end, you will learn. You will learn how to take high probability trade and how to avoid low probability one. That's enough chit chat. Let's go to the chart. Here is the 5-minute chart, and I'm using the replay mode just before 9:30 opening. I will show you from there so that I can explain everything. This is 5-minute fair value gap and also the consequent encroachment of daily I fair value gap. This is the buy side liquidity, and this is all the buy side liquidity. As all of you know that I was expecting that market will clean this buy side liquidity first, that means in the morning session, and then it will clean this sell side liquidity, also all of this sell side liquidity using the FOMC to the PM session. But what actually price did, I will talk about that, and in the meantime you will learn how to avoid the low probability trade. So I'm here in the 1-minute chart. At 9:30 I was expecting that the first run will go up and clean the buy side liquidity, maybe this buy side liquidity or any of them. I mean, it will just clean a buy side liquidity. But instead of that, market actually came lower to this new day opening gap. And if you know what is the meaning of new day opening gap is, I'll repeat it. Actually, the lower line is the closing at 5 p.m. yesterday, and this is the opening of 6 p.m. yesterday as well. So there is a gap which is I marked as a new day opening gap. So I have seen that market actually came to the new day opening gap, and it has also traded this gap. You see 1 minute, this is a very small gap. It has traded that gap, cleared all of this buy side sell side liquidity. Now my expectation was, as I was thinking that market will clean this buy side liquidity, I was expecting a very nice, very clean market structure shift. But as you see, market didn't actually give me any market structure shift. Instead of that, it went higher. It's a very nice price leg, and it stopped over here. What it did, it came down and go up little bit, consolidate, then over there. It tried to go above this buy side liquidity, also cleaning this buy side liquidity, but it didn't. Instead of that, it has actually shifted the market structure to the lower part. If you go a little bit further, okay, so this is a very clean market structure shift to the lower part. At the first time, at the beginning of this video, I told you that I'm gonna talk about how to avoid the low probability trade. In my opinion, this is the low probability trading, the trade entry. But I'll show that if you are aggressive, then you could take this trade. I didn't take this trade actually. This is a very nice 22 YT model, but for me, in my opinion, this is low probability. Why this is low probability? How could it be high probability? As you see, price actually went to the consequent encroachment of the daily high fair value gap as well as the 5-minute fair value gap. But it didn't clean this buy side liquidity, also this buy side liquidity. That means when this setup has occurred over here, I was thinking maybe market actually, you know, respected this I fair value gap consequent encroachment or something. Then it will go higher and clean this buy side liquidity, because it didn't do its job over here. It didn't finish its job over here. So this is for me a low probability trade. But as you see, it was, if you took this entry, it was your entry would be here, and then it went very nicely to the lower portion and clean this sell side liquidity. So your entry would be here, your exit would be below this swing low. Now, if you see guys, this is very nice 22 YT model, as I always a big fan of this model. But I didn't take this trade. The reason was it didn't clean the buy side. When it didn't clean the buy side, it kept open it over here. I can't take this trade. In my opinion, this is low probability. So I didn't take this trade. Then how do I know which one is the high probability trade? So let's go to the high probability trade. Okay. So here is the sell side. You remember, this is the sell side. It has taken the sell side over here very nicely, and it was 11:25. So inside the morning session, I saw that it has cleaned the sell side liquidity. Instead of cleaning the buy side liquidity, it cleaned the sell side liquidity. In that moment, I was thinking, if market would like to go lower, it will give me a very energetic run, or it will, if it would like to go higher, then it will give me a very nice market structure shift over there, because it has cleaned the sell side liquidity. I am expecting a very nice 22 YT model. Let's see what market did. Well, in that case, trust me guys, just I was just crying for the market structure shift, because that was another thing. After cleaning the sell side liquidity, it cleaned again the sell side liquidity, and it's already at the end of the AM session. So I was needed a very nice market structure shift. What market did? Do you think this is very nice market structure shift? I think this is very nice market structure shift. Now there is two gap. One is here, another one is, just give me here, and the one is here. What did I told you about the breakaway gap? Have you watched my breakaway gap video? In that video, I told you that after cleaning sell side or buy side liquidity, if you have the market structure shift and two or more fair value gap, then the lower fair value gap would most of the time act as a breakaway gap. So price won't come over there. Rather, instead of coming the lower fair value gap, your entry should be to the upper fair value gap, but your stop loss should cover the 50% of the lower fair value gap. So when I have seen this, it has cleared the sell side liquidity. You see this very relative equal low, very nice sell side liquidity. After cleaning the sell side liquidity, it has given me a very nice market structure shift. What it did over here? Did it clear the buy side liquidity first, then gave me this market structure shift? No, it didn't. That means I was confused. It will go up and clean the buy side liquidity first, or it will go lower. So I was confused. But here, as you see, it has cleaned the sell side liquidity, gave me the market structure shift. So it doesn't need to come back again to clean the sell side liquidity. Instead of that, it will go higher. So I took that entry here to that candle. My stop loss was just below the lower fair value gap, as this is a very small fair value gap, so I didn't actually placed below the consequent encroachment. Instead of that, I just placed my stop loss below the fair value gap, and my target was this high. And this is also the new day opening gap. As you see, it actually here, that candle. When that candle was there, I was expecting that it will go higher, but instead of that, it started to go lower. So I manually closed my trade over here, though I hold the trade to my account, funded account, and then I stopped out to the consequent encroachment. No shame to tell you the truth. So that is the high probability trade for me. So that's all. In my opinion, this is the high probability trade. Let's go to the PM session. So here is the PM session, and as you see, if you have seen my video, I commented just below the video that if I see the 2 p.m. run is the lower run, then I will go for buy side. I also tweeted that to my Twitter. If you are not following me over there, you can follow me. I try to upload over there some, some post or something. As you see, at 2 p.m., FOMC news sent the price lower. Where it did send it? This is the 15-minute fair value gap. If you go to the 15-minute chart, you will see this is the 15-minute fair value gap. This is the 5-minute fair value gap, and this is the volume imbalance. So all of these are over here. So where did price came? It came to the 15-minute lower part, also the 5-minute fair value gap and volume imbalance. When I've seen this lower run, as all of you know, the FOMC main thing is if the first run is lower, then the second run will go higher. That means the first run is always the fake run. So I told you that if I see the lower run at 2 p.m., I will go for the buy. Now let me tell you how will you get the buy and how it could be a very high probability trade. You see it came to this fair value gap, consolidate over here, and just before 2:30 it has given me this nice market structure shift. You see, this is very nice market structure shift. I'm already expecting that market will go higher as the first run is the lower run, and I've seen this very nice market structure shift. In the next moment I mark this fair value gap. Then I was waiting for 2:30. If you see this candle, specifically this candle, 2:30 candle, at 2:29 it came to the fair value gap, but I didn't take the entry. At 2:30 I took my entry, and my entry was somewhere here. I took it to my fund account so 1 hour, and my it was filled maybe somewhere here. My stop loss was below this swing low because this is FOMC and price can just give a very big wick, stop me out, then started to go higher. But fortunately it didn't do it. It actually came little bit lower to this order block, and then the run. You see, this is the run. Where is your liquidity? There is your liquidity. I took a partial above this high. I took 50% off here and rest 50% closed over there. Then price actually started to go lower. As you see here, I didn't see anything to do something. I didn't say anything because I was expecting that price will go more high, but it actually didn't do it. It came to this volume balance, fair value gap, and everything. It came over here. When it came here, and it's already post 3 p.m., then I started to think if I see it breaks lower, and if it break this 5-minute fair value gap, that means if the candle close below the 5-minute fair value gap, then I will look for a fair value gap over here and then I will take short. But as you see, the candle actually closed just at the level of the lower part of 5-minute gap. It didn't close below the gap. That's why I didn't take entry over here. I was thinking maybe this is the liquidity run and then price will go higher again. Instead of that, it respected this fair value gap, also the consequent encroachment, volume balance, 15-minute fair value gap. You can see all of this and then nicely break down lower. When it break here and clean all of this sell side liquidity, I just closed my chart because In that moment, I was thinking, now if I go to the market, I will take the loss because I don't know what to say. But I just closed my chart, and then you can see it has actually came to the hourly fair value gap. If you have watched my weekly analysis video, I was expecting that price will come to this hourly fair value gap, and it actually came over here. So that's all for today. And I think you understand, guys, which one is high probability entry and which one is low probability entry. In my opinion, this is a high probability entry and this is a low probability entry. If you would like to take this entry, you can take this entry. This is also very nice market structure shift, a very nice run, and there is a fair value gap. You could take your entry over there, and your target should be here in sell side. But in my opinion, this is low probability because it has, you can see price actually made so many lows over here. So this could be a, the liquidity run. Like it will clean the liquidity, then it will start to go higher. It will give you a market structure shift over here, and then it will go to this equal high. You can see there is a equal high also, and let me mark it. This is very clean highs. So let me close it. Okay, so you can see this high and this high, they're very relatively equal. So it can do it from here. It could do it. It has respected this fair value gap low, and then maybe if it go higher and give you the market structure shift, then that would be a very high probability trade for me. My target would be here, but instead of that, it did this. Okay, at the last, I would like to talk about something else. One of my brother, he asked me, how do I actually see about the candle closing? Brother, I don't look for the closing. As you say, to the morning session, you asked me a question about how do I know when this 1 hour, where will this 1 hour candle close? I didn't know where will it close. When I have seen that it has cleared this sell side liquidity and gave me the market structure shift. This is your 11 a.m. 1 hour candle. This is your candle, okay? So when I have seen this, I took my entry over here, and that high was my first target. That would be my second target, whatever. And I was just expecting that the 1 hour candle will go above this high. Then if it would go above this high or somewhere here, that I don't care. Or it can come back and close below this low. That is also not my concern. My concern is at first it has to deliver above this high. When it will go above this and I am out already from the market, then price can close anywhere. So that is the thinking. I don't see the candle that way where it will close. I don't know. I even ICT himself told that he doesn't know where the candle will close, and he also don't care, doesn't care about that. So that's all. I think it's insightful for you guys. If you think it's helpful for your learning, then give me a thumbs up, share my link so that new people can know about my channel, and subscribe to my channel as well if you are new. That's all. See you. Bye bye.